Today on Debt Free in 30, credit card installment loans. What is it? We're going to talk about it starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Ted, welcome back. I want to start the show by announcing that I'm giving up.
You're giving up.
Giving up. I'm throwing in the towel. Because you know how podcasts work, right? We go on the podcast and we talk about a product. You know, so if you're a beauty influencer,
I definitely am,
which you
obviously,
are,
right?
You would talk about that, I don't know, cream or whatever.
Right. Mustache wax.
Mustache wax, exactly. And you wouldn't tell the audience that, in fact, you're getting paid by the mustache wax company for promoting the product. And so we've never done that because we're not very smart, obviously.
Apparently.
But today, that all changes. We're going to mention products. As you can see, I put a tie on, so I think that will make me more appealing to the advertisers. Also, it was cold out. That's the main reason I'm wearing one. And I'm hoping that by mentioning these products, the big banks will call us and pay us lots of money. That's my idea. So
you're not quitting your day job, right?
And I'm going to quit my day job. Exactly. Yeah.
Okay.
Probably not. So today's product, installment loans for credit cards. Now, 5 minutes ago, had you ever heard of that?
I had never heard of that. I'm still not sure what the hell you're talking about.
So I hand Ted cue cards, and here we go. So he's going to learn about this as we go. Now, we don't actually have a deal set up with any of the big banks.
So we haven't quite figured that part out.
No, we haven't quite nailed it. But I'm hoping that they will watch
out of the
this
goodness
show,
of their hearts.
Exactly, and offer us lots of money. So I'm going to start with my new best friends at CIBC.
Okay.
A wonderful institution, if CIBC is watching. They have this new thing called CIBC PaySit, which is trademarked.
Okay.
Other companies have it. We'll talk about those too. So it's an installment plan for your CIBC credit card. Okay.
Okay, that sounds okay.
Sounds okay. So here's how it works. You go online and you sign up for the PaySit program.
Okay.
So you got to, fill in some forms or whatever. And then you can look at all of your transactions, and they'll have a little tag beside them on screen.
These are all my transactions on my CIBC card.
On your CIBC credit card, that's right, that says eligible for installment. And in order to be eligible, well, it has to be over a certain amount. I don't know if CIBC has the same limit as everyone else, tends to be around $150, something like that. So, okay, this particular transaction, that lawnmower you bought at Home Depot yesterday for $400.
Are we expecting a check from Home Depot?
Yes, too? Home Depot. Fantastic. See, I'm getting the hang of this.
There you go.
We're going to make some money on this podcast. So I click on the button and say, yes, I would like to turn that one transaction into an installment loan.
Right.
And then it says, which type would you like? So you can do 6 monthly payments, 5.99% interest, 12 monthly payments, 6.99% interest, or 24 payments, 24 months, 7.99% interest. And of course, there's also a 1.5% one-time installment fee for the purchase. So on the surface, this seems fantastic because my normal credit card has an interest rate of 19% or whatever it is. So rather than buying the thing and paying 19% interest, now I can buy the thing and pay perhaps 6% interest. Right. So what's the problem? Is this not the most fantastic thing you've ever heard with my new friends at CIBC?
Where do you want to start? Wherever I like?
Wherever you like.
All right. Well, let's start with this extra purchase fee then. So I'm buying this thing for $1,000 and I put it on my CIBC credit card. Now, unless I'm mistaken, somebody has paid a transaction fee to CIBC for using that credit card. We know the merchants complained about it, and there was recent legislation allowing them to pass that fee on to me, but you and I both know that the fee was already buried in the cost of the item anyway.
Exactly right. And we did a show on that, I don't know, a few weeks ago. And you're right. So the merchant is paying 1%, 2%, 3%, whatever it is, on every purchase that you're making.
And so now I'm paying an admin fee of 1.5% of the purchase price for the privilege of paying them back this money at a lower interest rate.
Right. So, let's do the math here then, because you gave the example of $1,000.
Okay.
So $1,000 purchase, 12-month term, the interest rate is 6.99%.
Okay.
So I take the 1,000, I add 1.5% to it.
Which is what, $15?
$15. Okay.
We figure out what our monthly payment then is to do that $1,015 at what, 6.99%?
Yep.
It's like $87.82. You've got the math figured out for me.
There you go. So $87.82 a month for 12 months.
Right. So it's $1,053.84.
So you're paying $15 plus $38.84 in interest.
Right.
Okay. So that doesn't sound like that huge a number. So do the same thing for me again, but let's assume I'm doing the 24-month deal, which is the maximum period, and 7.99% interest.
So the $1,000 plus the 1.5%, so it's $1,015. And then the monthly payment on that's going to be $45.90. So you're going to do that for 24 months. So the total cost is $1,101.62.
So I bought something for $1,000. I end up paying an extra $100.
Right.
Is how that works out. Okay. So, and again, that doesn't sound that bad to me, because if I put $1,000 on my credit card and didn't make any principal payments for a year,
right,
19.9% interest, that's like $200 a year, right?
Right.
I'm doing the math right.
Yep.
So you're saying it's $86 in interest. Well, using the 1 year example, it was $39 in interest. That's a lot less than $200 in interest.
Yeah, we'd have to do the math to show that. So to compare it properly, we're going to pay that $1,000 off in a year, but we'll be charged 19% interest every month on the outstanding balance. It's still a lot. It's still a savings, and a significant one. But
right, and even without doing any math, because I don't know how to do math, 19% is a lot higher than 7%.
Correct.
So clearly, I am paying more than twice as much in interest.
Yep.
Even if I'm paying it down over a period of time. So,
well, and I don't know, do we call it 7% or do we add the 1.5 and call it 8.5%?
Well, you're right. It's 7% on the inflated number, the number that's been inflated by 1.5%. So you're right. It's higher than 7%, obviously.
Right.
So again, this sounds pretty good. Like, what am I missing here? Why should we not all be rushing out to do this?
Well, so, I mean, the way I'm looking at this is they're telling you got this $1,000 purchase that now you can basically finance over 2 years. So I'm assuming that's going to cause you to incur additional debt because now your payment is much lower than it was going to be, and so you can afford to borrow more.
Yeah, and I think that is the big problem with this. I now have the ability to borrow more, certainly from a cash flow point of view.
Right.
Because I've now got I've got something for $1,000 and I only have to pay whatever you said, $87 a month or $46 a month or whatever.
Right.
So the temptation is to borrow more than I otherwise would be doing.
Right.
Okay, so CIBC, we're not saying anything bad about you, so you can still sponsor the podcast, I think is what I'm saying.
The check's in the mail.
Check's in the mail. So let's talk about your favorite retailer, Canadian Tire.
Okay.
Now, they have a card that's called Triangle.
Yeah, I remember they switched that a couple of years ago.
Because the Canadian Tire logo is like a triangle, okay? And if they were sponsoring this show, we would put the logo right up on the screen.
And we're willing to change our logo.
We're willing to change our logo to a triangle, exactly right. And they have a special plan if you use their Canadian Tire, I believe it's a MasterCard, at one of their stores. So they own Canadian Tire, Sports Check, Marks. Used to be called Marks Workwears, but now it's just Marks.
That's because they want to sell to more people.
That's right. It's more inclusive. Hockey Experts, there's a few others. So here's how it works. You go into one of these stores with your Canadian Tire card and you spend $150 or more.
Okay.
So it's not just something small. It's got to be $150 or more on a qualifying purchase in store with your Triangle card. And at the checkout, you can ask the cashier for financing. And in fact, probably the cashier might even ask you and say, hey, it just popped up on my computer. Would you like to finance this? And it's the same if you're buying something online, same deal, $150 or more. You select the equal payments option on the checkout page. The total purchase is then separated into monthly installments over 24 months. And as long as you pay the minimum due on your statement each month, there are no fees and no interest.
That sounds
this
like a pretty
sounds
good
even
deal.
better.
Yep.
So, for example, $550 purchase, and I pulled this example right off the Canadian Tire website. I'll put links on YouTube to all of these things we're talking about so you can verify that what we're telling you is true. $550 purchase, monthly payment would be $22.92 over 24 months. And in addition to that, you get Canadian Tire money. You get 4%, which I believe is how it works if you go into the store.
It's just the rebate.
It's the rebate. So you're getting $22 in Canadian Tire money because you've made this purchase. So there's no fees, there's no interest. I get Canadian Tire money. I do not see any possible downside here. What am I missing? What do you think?
Well, so the obvious thing is that encourages everybody to go into a store to spend at least $150 when they're there, because you're not eligible for this if you don't. If you do that every time you're there, then overall you're going to spend more money, so they're going to make more money.
And so is that why they're doing it then? Because again, why would Canadian Tire, our new sponsor,
that CIBC deal didn't last very long.
With podcasts, you can have more than one sponsor, because the way it works at the start of the show, I would read the ads for all 6 of our sponsors.
Oh, okay.
The 5 big banks plus Canadian Tire. So why would Canadian Tire be offering a 24-month interest-free loan? I mean, that's got to cost them something. There is a cost of capital.
And it's got to be built into the price somehow as well. And so is that 4% rebate. It's got to be baked into the cost of goods you're buying.
So why are they doing it then? What possible reason is there for letting someone pay over 24 months for no extra compensation? Because again, I get it. If I'm getting a loan and paying interest, then they're making money on the interest.
Right.
But here they have to borrow the money or finance it somehow and give it to me, and I'm not paying anything extra. Doesn't seem like a good deal to me. What am I missing here?
Somebody's done the math, and they've determined that they make more money because they encourage more sales. More sales means more profit overall.
So it's as simple as that. This is a way to...
Well, think about it. If you had a choice between going to buy that lawnmower you were talking about at Canadian Tire or someplace else.
Home Depot, our other sponsor.
And you can make 24 equal monthly payments at Canadian Tire.
It's a no-brainer.
Right.
Yeah.
It's cash. Cash is king.
Cash is king. So I'm going to buy it at the place where I can finance it. Now, this is not just a CIBC or a Canadian Tire thing.
Right.
I did show prep. It's right on my card here.
Mm-hmm.
TD Bank, you've heard of them?
I have.
They have a payment plan. It's $100 or more, 0 interest, but the payment plan fee is 4% if you are going to pay it over 6 months, 6% if you pay it over 12 months, or 8% if you pay it over 18 months.
So that means that $1,000 purchase, if you're going to do it over 12 months, they're going to charge you $60 in interest right up front.
Right. And so when you compare it to the CIBC deal, that's actually slightly less, I guess, because the CIBC deal over 6 months was a 7% interest rate, I believe.
Yep, 6.99.
6.99 plus the 1.5%. So, okay, this is somewhat comparable to what the other banks are doing.
Which makes sense.
Scotiabank has something called Select Pay, very similar to TD Bank. I won't go into all the specifics. RBC, another bank, I'm sure you've heard of them. They have something called Pay Plan. Now, I went on their website and I couldn't figure it out.
Okay.
It was not transparent.
That's not a good sign.
Not a good sign. So, well, because what they want you to do is click the button and go in and do it.
You're a CPA, right?
I am a CPA, yes, and I could not figure it out. Well, because it's not, I couldn't find it there. Like with TD, CIBC, Scotiabank, it says, here's the interest rate. With RBC, I couldn't figure it out. Now, maybe it's because I'm not an RBC client. Maybe if I was and I could log in, I could see
you could get behind the veil.
Behind the veil. There's another bank called BMO. They've got something similar. It's called PaySmart, and you can do 3, 6, 12 months. There's no interest, and there is a monthly fee of up to 0.9%, so just under 1%. So if you're doing a 6-month deal, that would be 6% interest. Again, that's somewhat comparable to what every other one, although that is 0.9% per month.
Right.
Which is not the same as 1% per year. That's 1% every month. So again, crunch
annualized. What's that number?
Well,
10.8%.
Yeah, mathematically, it's higher than what the other banks appear to be charging. So again, every bank has one of these. Is it the only problem that you can see that it's just, well, you're taking on more debt? Is it as simple as that?
Well, that's the tip of the iceberg. I think it's going to be more complicated, but you have to see the details before we can be sure. Like the example we've been using is you go out and you buy this lawnmower. Well, let's say I went out and I bought $1,000 worth of hand tools. So I bought a shovel, I bought a rake, I bought an aerator, all sorts of this stuff. So is it this particular transaction that entire purchase, or am I clicking boxes for the shovel, for the rake, for the aerator? I mean, that's all nuts and bolts stuff, but
right. And I don't know the answer to that. I would assume on my Visa statement or my Canadian Tire MasterCard statement, there's one line for the purchase I made, even though my receipt has 40 things on it.
So we're assuming that would be it. So Costco switched to CIBC recently this year. Mm-hmm. So I guess any purchase you make at Costco is probably eligible.
Oh.
Well, Christmas is coming up. So you buy everything at Costco, pay it off over the next 12 months.
Yep.
Who knows?
Yeah. Now, I don't know if the CIBC Costco MasterCard, I believe it is.
Are we going to send Costco a thing too?
Yes. We got so many sponsors. This is fantastic. 5 banks, Canadian Tire, Costco. I believe I've mentioned Home Depot 3 times now. So this is I'm getting the hang of this, man.
This podcast contains unpaid promotion of various brands, products, and services. Hoyes, Michalos and Associates is in no way affiliated with the companies mentioned throughout the conversation and does not necessarily align with the beliefs or standards of the mentioned brands, products, and services. Unless they wish to pay us a lot of money. But not really. But maybe. But not really.
Right.
We're in what? Season number 9?
We have to start wearing their clothes or something.
Yeah, exactly. We'll wear branded apparel. We've been doing this show for 9 years. I think this is show number 429, and we finally figured it out. So I'm so proud of us. Okay, so we don't actually know specifically how it works. Right. I don't know if the lawnmower is one thing and the shovel is another thing, or if it's everything you purchased that day, or how it works. Let's talk about practical advice then.
Okay.
So I think the first piece of practical advice would be you should figure out how it works.
Right.
That'd be good.
Be helpful.
And so how would you go about doing that? I guess it's a case of going on the website, crunching the numbers, that sort of thing.
Yep. I mean, if you're not comfortable with websites, I guess the first thing you would do is you'd go out and you'd make whatever the minimum purchase is and click on it and see how the damn thing works.
Mm-hmm. And from what I understand from the banks, you have to actually apply for the program in order to get the little badge thing showing up on each transaction.
So maybe we should start with the triangle card.
There we go.
If we have a triangle card.
If you have one. So, and I logged into my bank, and I have not signed up for their program, so I don't see any little, you can make this an installment thing on my thing.
I don't think I'm telling my wife about this.
No. She doesn't listen to the
or
podcast,
my kids.
does she? Yeah. Right. Mm-hmm. But, okay, so I think practical advice number 1, you should actually understand how it works.
Right.
That kind of makes sense to me. So what's eligible, what isn't? And in particular, this thing about if I miss my minimum payment.
What happens?
Yep. Because the way I read what I had read before, I believe it was with the Canadian Tire one.
You miss it, you're out of the program.
Right. And does that mean interest gets backdated to the beginning?
Probably.
Clearly, interest would then start accumulating from that point forward.
Well, and does it compound because you didn't pay it for those first 6 months while you were making the payment?
So it could be a fairly serious thing. We did a show, it was a year or two ago now. It wasn't you and me, it was our friend Jennifer Kwan, about buy now, pay later things.
This is just another form of that.
This is another form of that. And the buy now, pay later thing is, as I recall, I go to the store and I can split the purchase up into 4 equal payments.
Furniture companies have been doing that sort of thing for years.
For a while. And it's also pretty common with clothing, shoes.
Really?
Yep. And makeup, because we're going to get a sponsor for your mustache wax thing.
Thank you.
And under those scenarios, there is, virtually no fee to it.
Right. But
you can only split it up over 4 periods, so 8 weeks in general. So they're not incurring a huge financing cost.
Right.
But if you start missing payments, then you start getting whacked. And that to me is the biggest risk to what we're describing here.
Sure.
That the costs are really low if you keep making your payments, but you miss one and you're pooched. Isn't this the way the furniture, you just mentioned it, the furniture companies, you do the don't pay a cent for 2 years deal.
Right.
But at the end of the 2 years,
you pay it off in full, or they retroactively charge interest.
And so it's not quite as sweet a deal as it may sound.
Anything that sounds too good to be true?
It probably is. Right. So, okay, back to practical advice. Number 1, you should understand how it works. what else should I be thinking about?
Before you incur any new debt, you need to take an assessment of how much debt you already have. So how deep is this hole that you're in already? Can you afford to shovel a little bit deeper with this new product?
And if I can't, then I guess, I should be saving up for the lawnmower before putting it on credit.
Or at least make some decisions that, okay, I mean, the example I was giving, you go to Costco and it's over the $150, so you put the whole thing on there. Well, probably you bought a bunch of groceries. So now you're doing a monthly payment plan on your groceries. I'm not sure that makes any sense for anybody.
That sounds risky to me. Now, I get it. Sometimes things happen in life.
Sure.
I got laid off last week from my job.
I told you I'd bring you back soon.
I know, I appreciate that. That's why I'm looking for all these sponsors, just to try to keep it going here. But stuff happens, right? And so, okay, I got laid off. I don't have a paycheck coming in this week. My EI takes 6 weeks to kick in because of the holding period.
Yep.
So I have to buy that thing I have to buy. This kind of makes perfect sense that I can spread out the payments. Why would I not do it? So I'm not being dogmatic here and saying under no circumstances should you ever do this ever.
All we ever say is be careful.
Be careful. And the other thing that occurs to me is back to our Canadian Tire example.
Yep.
So I get to the cash register and the cashier person says, hey, would you like to finance this? It's like, oh.
I can do that?
I can do that. I don't like to be blindsided by anything.
So you don't like the surprise offer?
I do not like the surprise offer because it's very tempting to, I'm not going to.
It's an impulse purchase.
Right.
That's why they're doing it.
That's why they're doing it.
Yep.
So I don't have a whole lot of time to think about how it works and what's the deal. I'm much more likely to just say, hey, let's grab it.
Sounds good.
Sounds good. So the other thing that Canadian Tire is famous for, this might mean they're not going to sponsor the show with what I'm about to say, but
you have no idea what I spend there for my automotive hobbies, right?
You're a fan, and I've been there a few times myself. When you walk into the store, there's always a bunch of guys with triangle T-shirts saying, hey, credit card, credit card, credit card.
Right.
So it is a significant part of their business.
Yep.
And that's why it makes sense for them to do it. So, okay, final question then. I assume the whole wants versus needs thing factors into this then as well.
We could do a show on that, but neither of us is qualified.
No. But conceptually, what's the...
Well, so, I mean, the example you just gave, something goes wrong and you've got to have something. That's not a want, that's a need. You got to have it, whether it's paying the rent or some sort of food, you need groceries, gas in the car, whatever it is, that's a need. Now, when does a need become a want? Well, so instead of shopping here I live in Guelph, instead of going to the Guelph Mall, I want to go to one of the Toronto malls because it's coming out Christmas. That's no longer a need, that's a want. I want to do something different. It's a luxury item. And people will argue on how to define luxury. It's just another word for want.
It's different for everybody. And obviously food is a need.
But there's different levels of that too, right? I mean, the example is all of our kids these days like these single portion things because that's what they were raised on. When you and I were kids, you'd get a little bag with a bunch of crackers or something in it. They weren't single portions, and now you can't get away from them.
We had peanut butter and jelly sandwiches.
Well, you're not allowed with that anywhere anymore. But anyway.
Can't do that? See, I'm so out of the loop, I have no clue anymore. Well, if my car gets a flat tire...
You need a tire.
I need a tire. And if I need my car to get to work because my shift starts at 5 a.m. and the buses don't start running till 6, then that I would say is a need.
Yep.
And I have no idea how much I guess if they're fixing the tire, it's cheaper than if I have to buy a new one. And if I'm buying one, I'm probably buying 4 because that's how cars work.
Yep.
And because eventually they go, and I don't really want to be driving around on bald tires. In fact, I didn't tell you, but I had my car in on Friday.
Yeah, you're getting your snows, weren't you?
Yep, getting my snows, and apparently my ball joint was busted. I think that's what it was. And there's an arm that attaches to it or something.
Sure.
And I was wondering why I always had to have the steering wheel in a non-straight up position. I'm thinking, okay, they're probably true. I actually trust the guys at the place I take my car to.
Right.
And I do have 240,000 kilometers on it. So that thing will probably break at some point, right?
Yep.
So, that is probably a need.
It certainly is.
And it costs more than $150.
Yep.
And so...
And you couldn't necessarily plan for it.
No.
I mean, you can if you put up a maintenance schedule when you first buy the car. This is what I'm going to have to do every month. Nobody does that.
Well, that was 12 years ago. And
Right.
so I didn't factor that into the process. So in this case, well, I put it on my credit card and I will pay it off at the end of the month and that'll be that.
Right.
But I guess that would be a classic case where, okay, well, if I had to,
Yep.
then this would be a case that perhaps I would use it. So, okay, what then is your overall conclusion on this? How do I decide whether or not I should be taking advantage of a credit card installment loan or not?
Well, so whenever a company introduces a new product or service, they're doing it because they think they can make more money using it. And so don't do something because it's to the company's advantage. Make sure it's to your advantage. So it means looking at what's my overall debt picture? What's my overall monthly cash flow picture? I was going to buy this lawnmower because that's the example we keep using and put it on my credit card and deal with it. Well, now I'm talking about setting up a separate monthly payment just for the credit card, just for the lawnmower. And I've got to make sure that I can balance all these things. It may actually make sense to do it. I'm not saying that it doesn't, but do it because it's something that works to your advantage, not because I'm trying to sell it to you.
Yeah, don't be blindsided the cashier. But in my example of this car repair where I had to spend
you had no
$500,
choice.
then, okay, to be able to spread it out over 6 months or a year, a little easier on the cash flow. Yeah, okay, I have to pay a bit of interest. But in the examples we looked at, well, if the interest is $50 or $100, okay, that's a big number, but it's far better to do that than put it on a credit card at a 19% interest rate.
Well, and if you had to park the car, you're out of luck.
Right. I can't go to work now, so then it's costing me a lot more. So
You know that layoff we were talking about? I may have to put you back and get on my car.
If I don't have a car, can't get to our wonderful studio here in Kitchener, Ontario. So, okay, so I think that all makes sense. You know, give it some thought is really what you're saying. So there you go. So I don't know if any of the sponsors are going to join us after that or not, but we gave
I think
it a
I can
shot,
make
so.
a prediction.
Yeah, we're
not good.
We're doing the prediction show at the end of December.
Oh, that's right.
We can throw it in there. So okay. My concluding comment then is exactly what you said. I think you have to think about it and make your own decision.
Right.
So your car breaks down, you need a new whatever it is. Spreading the payment out may make sense because it's something that I need.
Yep.
But if I'm buying something I want but don't need, okay, well, financing perhaps less of a good idea. And I'll emphasize what I said earlier, and that is be prepared. Think about what these deals are in advance.
Right.
So understand that when you go to certain retailers, they may offer you the credit card installment loan or the buy now, pay later. You don't want to be blindsided by that and go, hey, that's fantastic. I'm going to buy twice as much stuff now that I've got that.
Right.
You have to be able to say, if they offer me that deal, I'm not taking it because I'm paying off my credit card at the end of the month. Or I am going to take that deal because I've crunched the numbers and it makes sense. You don't want to be getting talked into debt, I think is the overall picture. So there you go. That is our show for today. Please like, subscribe, hit the notification bell, and visit all of our sponsors. I think I have to say that too.
I
don't
think you do.
Isn't that how it works?
We'll probably flash their logos someplace.
Yes, we'll be flashing their logos somewhere. We now have over 8,000 subscribers on YouTube, which is pretty good for a show about,
It took us 9 years to figure out
nine years.
how to monetize it.
Yeah. No, we haven't figured out how to monetize it yet. We're nowhere near that. But
People may not know what that word means.
No, make money. So, yeah, I mean, I think guys like Joe Rogan have 100 million subscribers, so we're not quite in
He's doing better than us.
Quite in the same level, yeah. And there's a lot more subscribers on the various audio versions, Spotify, Apple Podcasts, every podcasting app. So thank you for all of you for subscribing and listening. And if we got any of our facts wrong, or if you've actually tried one of these credit card installment loans, please leave a comment on YouTube, because that way we can understand more about how they work.
Right.
So there you go. New show every Saturday morning. We'll see you again next week. So until next week, I'm Doug Hoyes. That was Debt Free in 30.